This is money management for real estate agents. I'm going to teach you how to save like $1 million agent. I'm Nick McLean, and over the last 15 years, I've generated over $35 million in real estate commissions. And I'm going to share with you the actual framework and methodology I use to save my money. I was shocked when I got into the real estate industry how everyone was told they're running a business, but nobody was taught how to manage their money. So today I'm going to show you every step I use to save my money. I've taught this to dozens, if not hundreds of agents, and they've collectively have saved millions of dollars and used that money to buy rentals and actually retire from the industry. Stay to the very end because I'm going to tell you whether or not you should be an LLC or a sole proprietor. So let's get going. You run a real estate business, which means you need to understand the difference between revenue and income. As a business, when you make a sale, you get a commission check. That's revenue. That's not income. See, we've been taught through grade school and to get an education, get a job, work for someone else, and get an income. Get a paycheck. And so as a real estate agent, when you get that commission check for $10,000, that's not your income. That's not your personal income. You are the last person to get paid. Write it down. When I make a commission check, I'm the last person to get paid. I just generated income. It's called gross commission income. It's revenue. Now, out of that revenue, we got to pay a lot of people, and we're going to dive into that. And I'm going to show you how to manage your money so that you don't go from rich to poor to rich to poor to rich to poor like every other agent in America. I'm going to show you how you can save millions so you can retire and invest that in properties like I do. I love rental properties. I like cash flow. So let's go even deeper. Number two, I want you to understand you need a personal bank account, you need a business bank account, and then you need a savings account. So I need you to establish those. So I go to Chase, but you can use Wells Fargo or whatever you want. I have a personal account there, and I have a business account. When you get a commission check, $10,000, it's going to go into your business bank account. Your business bank account. And we're going to talk about what happens after that. Number three, I want you to get a personal credit card and a business credit card. Every single expense that I make within my business or for my business goes on my credit card. Now, I might have a check or an ACH, but I am adamant that everything goes on a credit card. Now, there's merchant fees and everything like that. But far as accounting goes, at the end of the year, all I got to do is look at my accountant or myself. All I got to do is look at my business credit card expenses. So everything goes on there. I pay it every month out of the business bank account. It's on automatic withdrawal, automatic payment. I paid in full. So it's absolutely dumb debt for you to do this methodology and not pay it off in full. So you have to commit to yourself that I have to pay it off in full. Now I have a personal credit card that all of my personal expenses go on there. So many agents commingle the difference between business and personal, business and personal. In fact, they use their business credit card for personal expenses. As soon as you do that, psychologically, you think this revenue is income. Your business bank account and your business credit card is not for your luxury. It's not for your vacations. It's not for you to expense everything. See, we're taught to expense everything for our lifestyle. You're running a business, and this business needs to serve you, not be a slave, not make you a slave to it, slave to the business. So I have a personal business card and I have a business credit card. Now, at the end of the month, I have all my income comes in. And some months you don't have any income. And we're going to talk about safety margin and how much you should have saved. I'm going to pay that credit card off, right? Then I'm going to, right, pay the credit card off. What's left over, I'm going to transfer over from my business account over to my personal account in income, what I need to live off of. So the business is saying, hey, Nick, the CEO, we're going to pay you a certain amount of income. This is what I need to live off of. This is going to be my monthly nut. This is to pay my car, my mortgage, food, entertainment for the month. That's my budget for the month. So I'm pulling out of the business my budget. So you have to know what your budget is. Now, if you run out of money in your personal account, you're going to the business asking for extra money. It's like going and asking yourself for a raise. You have to have a checks and balances here. If your wife or your partner, your boyfriend or girlfriend wants you to spend more money, you need to check the business account and you need to get approval for that. Now, if you have an abundance of money in there, maybe there's a month where you do 3 sales and you make $30,000, you pay yourself your monthly income, say $5,000, $6,000. What's left over, right? I need to plan ahead for taxes. So I'm going to my savings account and I use Ally Bank, but you can use Charles Schwab or some online bank. I'm getting, I'm shooting this video late March 2023. I'm getting 4%, 5% interest on this savings. So I'm going to put 33% of that money into this account for taxes because you have a silent partner. We all have a silent partner, and that's the government. It's the IRS. We have to pay them that money. So don't be that agent that gets into IRS debt, right? So we're going to put 33% in our savings account, and we're going to make interest on it throughout the year. It's absolutely incredible. So now I go to the tax, I pay myself personal. Now I leave in my business account 2 to 4 months of reserves. So what does it take to run your business on a monthly basis? Your credit, your business cards, your signs, your photography, your marketing costs. You should have 2 to 4 months in your business account. So obviously I'm not putting money away in my Ally Bank account or my savings account until I have 4 months of reserves or a margin of safety in the business account because I need that operating expenses that goes on there. So 33% savings, pay myself a personal income, and then I maintain 4 months. So obviously, if I don't have 4 months of income in my business account, I can't save for taxes. I can't save for retirement. I can't save for my investments, and I can't pay myself personally. I can't get paid yet. And you might be saying, whoa, Nick, what am I going to do? How am I going to pay my bills? Well, you're going to have to figure that one out. This is budgeting. Maybe sell more homes. You got to figure out your business needs to run itself and support you as the employee. Now, as things grow and you're making more and more money, and you got 4 months in your business account, you're able to pay yourself a monthly budget in your personal account. And your online bank account is growing, right? So you putting 33% away on every check, and it's growing and growing and growing, right? You can start thinking about ways to retire, ways to invest. So for me, I have a daughter. She's 5 years old in 2023. I have a 529 college savings plan. So I'm able to, out of my personal account, invest in her. So I take a little bit more money out of my budget. I give myself a raise and my income goes up, and I put a little bit away for her college savings. Now, out of the business account, I'm an LLC, and we're going to talk about that at the very end. I have a 401k I've set up for me and my employees. So a 401k is coming out of my employee benefit package. So I don't even have to transfer over to personal because I'm actually on the payroll for my company. So I go 401k. But if you're not an LLC, you can do a SEP IRA, self-employed IRA. That's going to lower your overall tax burden and start contributing to your retirement, which is absolutely incredible. Now, for me, I love rentals. So I have a business online savings account, and then I have a personal online savings account. So I'm putting even more money away into that personal investment fund where I'm saving up enough money to have enough cash to invest in cash-only properties. And as I develop more and more rental properties that are throwing off cash and cash flow, I'm putting that money into an investment account. So you can see how you need to have multiple accounts for your multiple businesses and revenue streams. You start out with one personal, one business. Now, should you be an LLC or should you stay a sole proprietor? If you go and talk to an accountant, they're going to tell you to become an LLC because there's a couple things going on. Number one, they're going to tell you you're going to save in taxes. And they're right. There are tax advantages for LLCs. But what the accountant doesn't tell you is they're going to increase their revenue off of you considerably. Because if you're a sole proprietor, you're self-employed, right? They're only going to make money off of you, let's say, at the end of the year for your taxes. But if you become an LLC, they're going to establish it for you. They're going to do a little bit more payroll for you. They're going to establish you got to start paying yourself. And so that accountant is going to advise you to do that way too early. I see it all the time. Agents are becoming LLCs way too early. I don't think if you're making under 100,000, 150,000, I think you're at a point where you should consider LLCs, but you shouldn't do it. If you talk to an accountant, they're going to lower your tax burden. but they're also going to increase the amount of money you're spending on accounting. Now, if you're getting into that $200,000, $250,000, $500,000 range, it probably makes a lot of sense to not pay all that taxes, right? So understanding how you manage your money is so important when it comes to being a real estate agent. You have to get out of the mindset that this commission check is income. It's not income, it's revenue. And out of the revenue, you have to pay yourself. You got to pay your vendors, your payables. You got to pay the government in probably that order. Pay the government, pay your vendors, pay your employees, pay your fixed costs, pay the government, and then pay yourself at the end. And the more you make, this is actually going to incentivize you and motivate you to sell more homes and be more efficient and increase your sales price and increase your commissions and all of that, increase your revenue, so that what's left over at the end is a bigger number. And as that number gets bigger, then you can start doing some really cool things with it. 529 savings account, 401ks, SEP IRAs, investment portfolio to go after rentals and bank-owned properties and distressed properties. You're either going to start a fund, and you can do some other cool things. Like I have a Vanguard account. So I have a personal Vanguard account that I put money into in the money market, 5.1% right now, ETFs, index funds that are long-term, where I'm not touching that until I retire at 67 years old, which I probably won't retire, but I get to choose to retire. So you have these multiple ways of creating wealth. At the end of every month, I've done this for the last decade, and that's a net worth spreadsheet. So at the end of every month, I calculate my net worth, right? I don't calculate my income. I calculate what I keep at the end of the month. So many people look at that top line. I'm looking at the bottom line. And so my net worth is all of my assets minus all of my liabilities is what I'm worth. And I want to see that going up over time, right? I remember I really wanted to be worth $1 million. And I think I was 28 years old when I started doing this. I'm 43 now. So 15 years ago, every month I've done a net worth calculation where I calculate my home value, my investment values, my stocks, my bonds, my 401k, and then all my liabilities, my debts, my credit card debt, everything, and then I have a net worth. And I remember by the time I was 32 years old, I was worth $1 million, and now I'm 8 figures plus, and I continue to push on and grow in my net worth. So if you like this video, like, comment, and subscribe. We're going to be talking a lot more about money because it's an area of conversation that people don't talk about in the real estate industry. They talk about sales and they talk about units and volume, but they don't talk about money. And they definitely don't talk about wealth and net worth. And that's what I'm here for. I want to give you guys what I've learned the hard way by studying and reaching out to other mentors outside of the real estate industry so you can get off of the transaction treadmill, right? If you don't keep track of your money, if you don't watch your money, someone else will. And that person's looking out for themselves, not you. And so don't be a victim of being asleep at the wheel and working hard your whole life, 10, 20, 30 years, and having nothing to show for it. How many agents do we know that are still in the industry because they have to be in the industry? It's like that prize fighter that wins championships and makes millions like Mike Tyson and loses it all and has to fight into his 40s and 50s, where he's far past his prime. He's getting injured and it's costing him long term. Real estate is a vehicle for us to be a better version of ourselves and live the life that we want. So money is really important. So like, comment, and subscribe. I want to hear from you. It's going to motivate me to do more. If you like this video, it's going to motivate me to do more about money.